National Savings Certificate, that is NSC. That's a topic for discussion today in the Market Secrets Investment Series. Before we head into today's episode, I have a notification for you. In addition to investment series, we have multiple other series running in parallel on price action trading, algo trading, and also trading strategies. Also, we have multiple data feeds being provided as part of our website. So if you are interested in any of it, do check out our website www.marketsecrets.in. So with that note, let's jump into today's session on National Savings Certificate. National Savings Certificate, popularly known as NSC, is a savings bond primarily used for small savings and income tax savings in India. This service is part of Postal Savings System of Indian Postal Service. The certificates were heavily promoted by the government after independence of India in 1950s to collect funds for nation building. So, who should invest in NSC? Anyone looking for a safe investment avenue to earn a steady interest while saving on taxes can choose to invest in NSC. NSC offers guaranteed interest and complete capital protection. However, like most fixed income schemes, they cannot deliver inflation beating returns like tax saving mutual funds and national pension scheme. So, what's the tenure of investment? Earlier, NSCs were issued in two tenures, that is 5-year and 10-year instrument. Now we have only 5-year tenure NSC. And when it comes to the interest rate, current interest rate of NSC is 6.8 percentage and it is compounded half yearly but payable only at maturity. And when it comes to the maturity type, it's a lump sum one shot withdrawal. And when it comes to the minimum and maximum investment amount, minimum amount is 1000 rupees and in the multiples of 100 rupees thereafter. There is no maximum limit for NSC investment. You can buy as many bonds as you need and as and when you need it. And when it comes to the tax benefit, interest on NSC is taxable but only on maturity. Since this interest is not paid to the holder and is reinvested in NSC until maturity, tax is deferred in this case until maturity and this helps compounding. Also, there is one critical aspect here if you are trying to claim ATC benefits. As the interest rate is reinvested in NSC, which is a specific instrument under ATC, a taxpayer can claim this amount of interest as a tax deduction subject to a maximum of 1 lakh rupees. So if you are investing in NSC and if you are getting returns from it, right? So it is being reinvested in NSC automatically. So this reinvested amount can be claimed as a tax deduction under ATC. So if you want, you can do it. But since most of the people hit 1.5 lakh cap for ATC very easily, they won't go into trouble to claim this exemption. And when it comes to NRI friendliness, nope, NRIs are not eligible to purchase NSC. However, if a person was a resident Indian at the time of purchasing the NSC and becomes an NRI during maturity period, he shall be allowed to claim its benefits. And when it comes to loan facility, no, it is not available, but certificates can be kept as a collateral security to get loans from the bank. And when it comes to the withdrawal facility, under most scenarios, the amount that has been invested towards the NSC cannot be withdrawn before maturity period of 5 years. So no point in considering premature withdrawal options even though it is available. However, they accept it in case of exceptional cases like death of an investor or if there is a court order for it. Now comes the most important question, how to buy NSC. You can walk into any post office and ask for one anytime by submitting required proof. So how to buy NSC online? As of today, you cannot subscribe to National Savings Certificates online. You will be required to visit the nearest post office to fill out the NSC application form and submit it to the executive in order to open an NSC account. So how to cash or redeem NSC certificates after maturity? Upon maturity, NSC can be encashed at any post office branch and not necessarily at the branch where the account is held. If you want to withdraw the money from a branch that is not your account's home branch, you'll have to submit an application with details such as serial number, issue date, full name, and your registered and current address. So with that, we have come to end of today's episode. If you have any queries, comments, or feedback about this episode, please leave it down in the comment section. We'll be happy to answer it. Also, your feedback is important for us because that's a motivation factor and that's what will keep us going. So please do leave your feedback as well. Also hit the like button if you like this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.